Hello, traders. It's 8:01 a.m. on Monday, the 1st of April, 2019. It's April Fool's Day. Don't let the market fool you today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, crude oil is leading the pack up 0.83%, trading at 60.74. The laggard today is the VIX, of course, the VIX futures as we gap up in the indices. But the bonds are down 16 ticks. The U.S. dollar is down 13.5 cents. And the Bund is down 21 ticks as well. Overall, the risk sentiment is risk on. Allocation to risk this morning. I want to remind you, take a moment now to remind you that it is the beginning of the first day of the quarter. And you saw the size that traded on the close on Friday as the market rebalances end of quarter. Today's the first day of the quarter. And it's key to remember that because it's the first day of the quarter and the market has run up as much as it did since January, intuitively, people think, well, the adjustment's going to be to the downside. It's not. It's most likely going to be more allocation to risk like we're seeing here. We gapped up on the open overnight to 44.5. That's the open for the quarter, and have run up to 28.61 in the ES. Overall, we're likely to see a continued push higher. 28.90 is probably on deck over the next few weeks or so on a bigger picture basis. Again, allocation to risk, we have a gap up on the indices this morning. A pretty decent gap size in the ES. We're gapping up almost 20 points from the close in ES, 18 points or so. So it's very important for us to see how things are likely to shake out. So it's one of those days where we need to see how it opens and if it's initiative or not. Other than that, looking at the calendar, this week's got a lot of stuff in it. Again, beginning of the quarter, and it's likely to be a busy one. So this week, we had the manufacturing PMI from China last night. We have market manufacturing for Germany. Also in the overnight session, retail sales came in weak this morning. We had a small bloop down, which we've recovered from. ISM manufacturing this morning at 10 Eastern. Tomorrow, durable goods, balance of trade in Australia, durable goods in the U.S., balance of trade in Australia. Wednesday, ISM non-manufacturing PMI in the U.S. Thursday, ECB monetary policy meeting. And then Friday is the first Friday of April, which means that we have non-farm payrolls and unemployment from the Department of Labor Statistics, from the Bureau of Labor Statistics on Friday morning. That's how the week is shaping up. So there's something every day. Overall, nothing other than the non-farm payrolls is really huge for the U.S. And of course the ECB monetary policy meeting on Thursday. So that's how things are shaping up. Let's take a look at what we expected on Friday and what we got. Friday we saw a gap into 28.35.50. And the expectation is for a small reversion back into 28.31 or so, and then a push into 28.51 with an extended target longer term into 58. We got to 61. We got to 61 this morning. Voice is faint. Thanks for letting me know. 1 second. Let's check on that. Okay, let's crank that up a little bit. Should be slightly better. So the extended target was 58, big swing area up there. We got to 61, as I said, overnight. What actually happened was scenario two push back into the range, dip towards the point of control down at 28, 21, 20, and then come back out. And then we ran later in the afternoon. So here's what things looked like on Friday. Probably not. There was quite a bit of action here, more bars than I expected for a two-tick Renko. So here's the push higher off the open, reversion back, pull back to mid, continuation trade, consolidate. This was tough right here, tough area. And then we finally fall through into the prior range. We don't get anywhere close to the 21 or the 19.5 before we come back to the mid and then consolidate for some time before we close near highs at the end of the session. So as we push forward here, you can see we went neutral on the day, and we closed neutral extreme to the high side with a double distribution profile. Pretty bullish close on Friday. And overall, we dipped down into the prior day and finished pretty strong. So the continuation is not a surprise this morning. Looking at the overnight session, we open right at 44.50 and we pop right up and we continue to remain strong. We've stayed above the mid. We are clearly above Friday's close. So the overnight inventory is long. And we have quite a bit of kurtosis or a heavy volume right up here on a short-term basis. Now remember, I'm not a macro trader. I'm trading day to day. I do look at the bigger picture, and in fact, I'm looking more and more at macro as I develop as a trader. And if you think that 19 years of trading means you don't learn anything anymore, then you've got some surprises coming at you. I'm constantly learning and I'm constantly evolving. And if I hear something that makes sense to me that I can put some risk behind, I'm always willing to take it on, and I suggest you do the same. So as I look at the big picture of how things are shaping up based on that webinar from Ira 2 Thursdays ago for our trader spotlight, paying attention to the yield curve, paying attention to the treasuries, and kind of reading more of what's going on in the bigger picture. But I'm still, trading the plan that's in front of me, and I'm trading the auction that's immediately occurring. And I'm not the type of guy that's going to be compatible, I think, with something that just occurs at the open, or I have to wait till the close to trade. So I'm still looking at the auction. Very high kurtosis here in the overnight session. Good volume, and staying above mid, and the point of control and VWAP are tangled up together. We've been bouncing for quite a bit. The European session opened right here. We pushed up for new highs at 61.25 and have held sideways. Okay. And so that's how things are shaping up. We're pushing up against the one volatility sigma up, the 20-day 20-day rolling historical volatility band up there. This is one sigma is where we're expecting the market. We're expecting the market to close at or below this level, but with a gap up, we generally will likely breach that. In either case, I'm really looking to the long side, much more to the short side with this gap open coming in today. So what do we have for today? Okay, so let's take a look. One second. So here's the last swing high. Let me remove some of these. Put these in. There's the last swing high. It's right here. Okay. And we have cleared and moved away from the thick volume area below where we have a point of control down in the, where was it, 27 something, or 28, well, yeah, 28 14, and then there's another big one at 27 something, 27.37 maybe. We're moving to the edge of our auction. This is not the all-time high, but we're moving to the edge of the auction that we've been in since February, and so we're likely to see some sort of a an attempt at that high. We're not far from it. The market's been pretty bullish, and its shorts have been getting really creamed. There's quite a bit of short sentiment or seller bias. These rallies are being looked at as kind of quote unquote violent. Um, Dead cat bounces or violent bear market rallies, but I hate to say it, but we're not far from the all-time high here. So that's a fact. And yes, there's stuff going on with the yield curve and so on, but the market's climbing right through that wall of worries. So I have to trade what I see rather than what might make sense, because what might make sense to us may be an opportunity to those who control the overall auction. So an open auction, I'm looking for a reversion back, just as we always do. We're looking for the inventory to balance a little bit. So I'm looking for it to drop towards the prior day's range. I am looking for an impulse up, and I'm looking for it to tackle the 28.66 and start moving towards 28.7250. This high volume node here for some rest. That'll give us, if it dips down into the 50.52 area, which is expected, the key areas below 28.50. 28.44 and a half or so. And then we're looking at 39, 39, and then 21 is the big support. It's been playing for some time, 21. So overall, I'm looking for that push higher. Now, if we don't get the push higher, we don't get this opening swing building up, and in the market kind of testing below and getting above it, then this creates an opportunity for a reversion back. I'm looking for the overnight high to be taken, an impulse down that consolidates a while before it starts to drift down and revert back into 28.44.50, consolidate before it dips back in and finishes back out. So it's almost like a Friday type of trade where we tested the prior range to see if there's any interest of continued selling into the prior range. Once that interest dried up, the buyers came in and took it right back up. Again, we had the effect of end of quarter, end of month there, but I still believe that coming into today, we'll see a continued push higher as we tackle this last high. If the market were weak, if the market were dominated by sellers, if the market was too expensive, if the yield curve was a huge factor in determining pricing for equities right now, we would probably see we would likely see the market back into balance, back into the 28.14 and all the way down into the 27, the lower 2700s, 27.37. But it's not. It's pushing against the most recent swing high, and it's likely to continue higher. We don't know what lies above the 28.66 since the last swing, and a confident sell push would, just like you probably read in Reminiscences of a Stock Operator, a confident sell spree would kick in if we test the 28.66 and see a strong trend day down. That would give us a pretty confident push down through all the 2800s and back down into the 2700s. But that's not what I'm seeing. Again, that's just a bigger picture swing basis. That's not what I'm seeing at all. So trade what you see, not what people say, not what you think. Those things don't make money. What you think does not make money. It's what you see that makes money. Okay. That's all I have for you. I did want to look at the ES composite for a minute, just to locate us in the right, to locate us where we are in terms of where the big picture is. And here it is. So here's the 2866, this last little swing right here. And overall, we're not far from the high. Look at that. This is what we've done since the beginning of January of last year. Since January of last year, I should say. January 2018, the drop, pullback, drop, drive up, drive up, climb a wall of worries there with China and Brexit and whatnot throughout the year. Then we get the big movement in December, right in here. And then what does it do? It's pushing, pulling back, pushing, pulling back, pushing. So I don't see this as bearish at all. It just isn't behaving like a bear market. So this 2866 is a big target ahead, and it's just I'm not going to ignore it. Look also at the delta from the last swing. Here's the last swing. Here's the delta, the tick delta from uh, I mean the volume delta to the tick. Look at how strong this delta is with price. We have lifting taking place with price. I'm not gonna sit here and swing fade that, although I'm not a swing trader at all. But trade what you see, people. Good luck today, and I'll catch you tomorrow. Take care.